Live from Washington, D.C., I'm Kaylee Lines. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. This will be our last show of 2023. And joining us in just a moment is MicroStrategy Executive Chair and co-founder Michael Saylor for a wide-ranging discussion on the year ahead for the crypto industry. One topic, of course, certain to come up is the impact of spot Bitcoin ETFs. We'll get the latest on the timeline for approval. And speaking of Bitcoin, crypto author and analyst Noel Acheson will join us to discuss the surge in its price and what's next for altcoins. All of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is largely it is a down day for digital assets across the board. Bitcoin, of course, the largest. It's down by about 1.8%. We are now south of $42,000 once again. I'm going to have more on the action we have seen this year in just a second, but today it is a down day, really for pretty much everything, Ether included, down by about 3.4% to 2140 or so. Really the only exception among the different coins we look at on the Bloomberg terminal is Binance Coin, BNB, up by about 4% on the day. And interestingly, even though you are seeing some of the largest tokens out there under pressure today, Coinbase, which of course is in many ways a proxy in terms of equities for cryptocurrencies more broadly, along with MicroStrategy and others, is higher today, bucking the downtrend by about 1.3%. Back, though, to the moves we're seeing in Bitcoin. As I said, year to date, it really has been a different story than the red on the screen you see today. Bitcoin so far this year up by about 152%. It has actually been quite a phenomenal run, a triple-digit rally, the best year for Bitcoin going back to 2020. Of course, 2022, a pretty terrible year. We still remain more than $20,000 below the high we hit in November of 2021, but still quite a ramp we have seen. And of course, a lot of that has been driven by optimism around a spot Bitcoin ETF, because that's what market participants ultimately are counting down to. There is growing anticipation that finally the SEC is going to approve one or many of these products. And that's actually something I spoke with the SEC chairman, Gary Gensler, about last week.
We have, I think, somewhere between 8 and a dozen filings in front of this agency with regard to exchange-traded products around Bitcoin. And the staff of the various divisions respond when market participants have filings. We also had a court case earlier this fall in this regard. And so we do things according to our authorities and how courts interpret our authorities. And that's what we'll do here as well.
That court case, of course, being the Grayscale case, in which a court ruled the SEC was arbitrary and capricious in denying Grayscale's attempt to convert its Bitcoin investment trust into a spot ETF. For more now, let's bring in James Seyffert. He is Bloomberg Intelligence ETF analyst. He has been writing about this extensively. And James, it feels like we're getting closer to the finish line here, and we're seeing kind of a flurry of activity around many of these filings. What's the latest?
Yeah, so the latest is that basically all these issuers, we now have 13 total people that have total applications for these spot Bitcoin ETFs. We have one that just filed that included carbon credits there, 7RCC, a new firm is trying to launch one. But really, like you said, we're seeing a flurry of activity. One, Gensler in that answer to your question kind of hinted at what we've been saying, and that's that the courts and these other issuers, they've been circling. They're like sharks, and the courts and those issuers have basically backed Gensler and the SEC into a bit of a corner here. It would be very hard for them to find a way to deny. So we do think that approvals are coming. A wave of approvals are coming in January 8th to January 10th. But what we've seen is about by my recent count, we have about 23 different meetings for all of those issuers I just mentioned, all 13 applications. So that's a lot of meetings. We're seeing a flurry of filings, right? There's a lot of filings that have come through, and it's basically on the back of these meetings with the SEC. So these issuers are meeting with the SEC. The SEC is giving them feedback. They're debating different topics like in-kind versus cash creation. But for the most part, what the average person needs to know is that the SEC is working with these issuers to figure out the finer details of these filings.
Okay, and yes, we're talking issuers, plural here, as you said, about 13 in total, and that becomes a question of timing and basically who gets to go first. And that was actually something that our colleague Katie Greifeld asked Michael Sonnenschein, the CEO of Grayscale, about in an interview yesterday, and this is what he told her. Just take a listen.
I think that the SEC should and does in fact want to create an even playing field. And so we've publicly been advocates of the fact that when the commission is ready to give the requisite approvals for spot products to come to market, that it should be done all at once. The issuers who are operationally ready to launch their products should come out the gate all at once.
So, James, I guess I have a two-part question for you. First is it likely to be all at once? And then second, even if everybody gets to go at the same time, are they all going to make it if there's this many competing products?
Yeah, I mean, one, I agree with what Sonnenschein said. And also, the key point he said, if everyone's operationally ready. It's not guaranteed that all 13 of these issuers, even if they do get approval on the same day, are going to be ready to launch the day after. So there's two processes here, right? You need these 19 before approvals, which is what we're focused on, what everyone should be focused on. And those have a deadline of January 10th. But there's also other processes, these S1s, these offering documents, they need sign off from the SEC. So it could be we get approval and there could be a gap between approval and listing. That said, I think the way I usually look at this market and the way we look at ETFs is ETFs tend to be a winner-take-most market. So GBTC obviously is that most right now, but you have issuers like BlackRock and a lot of big players in this space, Invesco, and you have like some real niche players like Valkyrie and Bitwise that are focused on this closely. So I do think it's going to be winner-take-most. There will be one or two ETFs that thrive at the top, but I think there's enough room for plenty of these issuers to have successful funds and successful products. Now, is it going to be enough room for 13 products tracking the same thing? I'm not so sure. So there's going to be a lot of marketing. There's going to be a lot of competing on differentiated certain criteria of these ETFs. So there's going to be a hefty competition to figure out who's going to win and who will be around a year or two after these things ultimately do get approval.
Yeah, and I wonder what that means for fees. Michael Sonnenschein has consistently said that Grayscale will be lowering that 2% fee. To what level, though, he hasn't exactly said. So it'll be interesting to see how all this shakes out. James Seyffert of Bloomberg Intelligence, thank you so much for joining us. Really appreciate it. We want to add now another big voice to this conversation. Joining me is Michael Saylor. He is co-founder and executive chair of MicroStrategy. Of course, MicroStrategy, often seen as a Bitcoin proxy, it holds a lot of it on its balance sheet. Michael, great to see you. Thank you so much for joining us. Obviously, there has been so much anticipation and frankly, a lot built in, I think, to the price of Bitcoin of this idea that spot ETFs are finally going to come. What's the next catalyst for Bitcoin if and when that happens? How much further can it be pushed upward?
Well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. I mean, the last thing that was this consequential was the creation of the S&P index and the ability to invest in all 500 S&P companies via one trade at the same time. So this is very eagerly anticipated, but most of the money in the Bitcoin market right now is the hodlers and the traditional crypto investors. Mainstream investors, mainstream retail, mainstream institutions have not had a high bandwidth compliant channel to invest in this asset class until these spot ETFs. So I think in January, the approval of the spot ETFs is going to be a major catalyst that's going to definitely drive a demand shock. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal.
And that puts Bitcoin where a year from now?
Higher.
How much?
You know, we could probably keep a bunch of economists and modelers working all day long to calculate the supply, demand, and price elasticity of this. I don't think we've ever seen, you know, a 2 to 10x increase in demand combined with a halving and supply in a scarce, desirable asset that people want to hold for a long period of time. So I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point.
Well, and to get to MicroStrategy specifically, as I said, obviously a big holder of Bitcoin. Given what you just told me about how a spot ETF is going to make it perhaps easier, more appetizing for retail investors, institutionals to get crypto exposure via that product, why would someone still need to be a buyer of MicroStrategy? Is this actually something that is going to end up working against you?
You know, the ETFs are unlevered and they charge a fee. MicroStrategy is an operating company, so we're fairly unique because we can generate additional Bitcoin via our operations, either via P&L operations or capital markets operations. And we can take advantage of intelligent leverage. Like we can borrow money at 0% interest for many, many years. And we did that with the convert. And then we can use it to buy Bitcoin. So you can really think of the ETFs as like shipping lines, very efficient, long haul, carry a lot of capital. MicroStrategy is more like an airline. We don't have the cargo capacity in our capital structure that a container ship has, but we can go faster and we have higher performance. So we provide you leverage and we don't charge a fee. And so if you can dig into our capital structure, you get comfortable with that, we offer sort of a high performance vehicle for people that are Bitcoin long investors.
Well, if it is ultimately for people who want to be long Bitcoin, and we are seeing Bitcoin, as you anticipate, continually be pushed upward by some of these developments in 2024, what does that mean for your plans around holding, and whether there are entry points at which you would want to buy more, perhaps not?
Well, we will absolutely continue to acquire Bitcoin. Our strategy is to acquire and hold the Bitcoin, and we will acquire it by a variety of different means as long as they're accretive to our shareholders. So our goal is always to find a way to pursue more Bitcoin per share for our shareholders. And sometimes we do it with debt, sometimes we'll do it with equity, sometimes we'll do it with cash flows from the business. And of course, the volatility in the market just creates more opportunities for us as an operating company. And our particular business strategy allows us to harvest that volatility to the benefit of our shareholders.
Well, and let's talk about how you account for that as well, because obviously last week the Financial Accounting Standards Board passed new rules that will apply to MicroStrategy. Essentially means you get to capture all the highs and the lows of your cryptocurrency holdings. Technically, that doesn't actually go into effect until 2025, but you could adopt it earlier. When is MicroStrategy planning to do that?
Well, we're still evaluating that, and I leave that decision to our finance people. But what I'll say about the accounting is I think fair value accounting is a giant step forward for the industry. And up until now, corporations have had to invest all of their spare treasury reserves in sovereign debt. Sovereign debt normally has a compound annual growth rate of a few percent. The cost of capital for most companies is 10 to 12%. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations.
So do you think then that it could be advantageous for MicroStrategy to potentially use these accounting practices earlier rather than later?
I think that we'll wait for our finance people to give us that recommendation. I do think that the fair value accounting guidelines from FASB are just going to be good for the industry in general. They'll provide more transparency, and they'll be good for Bitcoin as an asset class and for Bitcoin as a treasury reserve asset for companies that have large cash flows that they want to carry forward.
All right, Michael Saylor, we got to leave it there. But thank you so much for joining us. Hope to have you back in the new year, and a very happy new year to you. That's Michael Saylor of MicroStrategy. Now, coming up, we're going to talk a little bit more about pricing, where Bitcoin could be heading in 2024. Crypto author and analyst Noel Acheson will join us to discuss also transaction fees and what's next for altcoins. And of course, to access all of the latest data and news on crypto, you can check out CRYP Go on the terminal. This is Bloomberg.
We're seeing discussions between the SEC and the ETF providers down to the technical details of exactly how are they going to do reimbursement, how are they going to do cash, et cetera. The recent filings that BlackRock has done regarding APs and the major banks being able to be treated as APs. So I think the market is pricing it in at about a 90% certainty.
That was Fred Thiel, Marathon Digital CEO, speaking to Bloomberg in the last couple of days. Joining us now for more is Noel Acheson. She is author of the newsletter Crypto is Macro Now. Noel, great to see you for a final show of 2023. And it's been a really big year for Bitcoin. He just suggested that this idea of a spot ETF is about 90% priced in to the market at this point. I look at the start of the year when we were south of $17,000. June, pre-BlackRock ETF filing, we were around $24,000. Now we're at 42. And I just wonder how much further realistically you think that has room to go.
I would say a lot more than that, Kelly. I do not think it is 90% priced in because crypto markets are not efficient. I would say perhaps it's 90% priced in from those that follow this market very closely on a daily basis. But that's not the majority of investors. And that overlooks the educational impact that the launch of a spot Bitcoin ETF will have. Suddenly you have big name issuers reaching out to their vast client databases to talk about Bitcoin. You have RIAs around the United States reaching out to their clients to talk about Bitcoin. So is it priced in? No, I would say not even close. So does that mean that we can put a value on what Bitcoin could get to? No, it doesn't, because Bitcoin doesn't, as you know, have fundamentals that we can value with any established model. It is very much supply and demand. The demand part is what we have yet to see play out.
Yeah, I'm struggling to get answers on actual price level this show. Michael Saylor of MicroStrategy didn't really want to answer that question either. So if we aren't talking about pricing, but more the role that this potentially could play in a portfolio, how much of this is about it being seen differently from an investment thesis point of view?
It's about Bitcoin not just being a speculative asset anymore. Obviously, the initial ETFs will perhaps be seen as speculative vehicles for those that want exposure to Bitcoin's volatility. But I do think, Kelly, that we'll see over the course of 2024, other ETFs start to put spot Bitcoin in their mix, either via the existing spot Bitcoin ETFs or maybe even directly. Bitcoin will go from being a standalone speculative asset to being a portfolio alternative, a portfolio diversifier, if you will. And that gives it a much more stable position in the investing landscape for a much broader range of investors. And potential inflows into the ecosystem from that slight narrative shift are potentially enormous.
So that's for Bitcoin, obviously, specifically. What does that mean for all of the other coins out there? Is that where all the oxygen is going to go and leaves a lot of these altcoins in the dust?
The oxygen will for now anyway, continue to go to Bitcoin, in my opinion. It is still a Bitcoin-led market. Sure, we're seeing Solana up 660% so far this year. Avalanche is up almost 300%. And I'm sure you've seen some tokens called Bonk and other really strange things bouncing around. We are seeing the revival of meme tokens, but most of that action is still being driven by crypto natives and perhaps by some mainstream investors as well. But we're not yet seeing the rotation, but the significant rotation from Bitcoin into some of the altcoins. Bitcoin dominance is a metric worth following. That just simply measures the Bitcoin market cap as a percentage of the total crypto market cap. And it is now around 54%, which is the highest it's been since April 2021. At the start of this year, Kaylee, it was at 40%. So as that continues to go up, that is Bitcoin sucking in new investment and increasing its dominance of the crypto market. When we start to see that turn, when we see Bitcoin dominance start to come down, that will know sentiment is shifting further out the risk curve, and that will be a new phase of the market.
Okay, so Noel, you say Bitcoin dominance is going up. Transaction fees are going up too, and this is something you flagged to us. What does that mean for the outlook? Why is that significant?
Well, transaction fees are surging, Kaylee. You're so right to point that out. I mean, just even smoothing a bit to take out some of the day-to-day fluctuations over the past 7 days, the average transaction fee on moving Bitcoin is over $25. And this is important. This is both good news and bad news. The bad news is that it impacts Bitcoin's potential utility. It's not exactly going to be used for small payments. And of course, there are many who will tell you it's not being used for that anyway. And I guess that's fair. They could also keep some retail investors on the sidelines, because you're not going to take a $25 position in Bitcoin if you have to pay $25 transaction fees. This doesn't make a lot of sense. But overall, it is actually good news for Bitcoin because it helps with miner profitability. They are earning a lot more on transaction fees than they have in recent history. And this matters because more profitable miners means more miners, and that is good for Bitcoin network security. And this is especially relevant given the halving that you've just been talking about on this show. It's also good in that it's more profitable miners, Kaylee, means that miners are not quite as pressured to sell the Bitcoin that they mine. That means less sell pressure coming into the market.
All right, Noel Acheson, always great to see you, and very happy holidays to you. Thank you so much for joining us.
Happy holidays.
All right, well, coming up before we wrap up this show for 2023, FTX unveils its latest proposal to return billions of dollars to customers as part of its reorganization plan. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lines in Washington. Now to some crypto stories that caught our attention this week, including a Montenegro court has ordered a review of a ruling that said conditions were met for the possible extradition of Do Kwon. The Terra Labs co-founder is awaiting extradition to either the U.S. or South Korea. Last week, Montenegro extended Kwon's extradition detention until mid-February. FTX unveiled its latest plan to end bankruptcy. It calls for billions of dollars to be distributed as cash to customers. It will be reviewed and voted on by creditors next year. The plan left some of the most important questions unanswered, including whether FTX will restart its defunct crypto exchange. More companies are tapping blockchain-based private credit as they deal with the reality of high interest rates. Active private loans via digital ledgers are up 55% since the start of 2023. That's according to RWA. One difference between blockchain-based private credit versus traditional non-bank lending is that the blockchain deals contain more fixed-rate offerings, whereas traditional rates are usually variable. And finally, Coinbase is deepening its feud with the SEC. The exchange is challenging the agency's refusal to create new rules around trading digital assets. Coinbase filed its appeal hours after the SEC denied a request for rules clarifying the standards for determining whether digital assets are securities. Coinbase says the legal framework is unworkable. And of course, the battle between all sorts of crypto players and regulators like the SEC is a story we are going to continue to cover for you coming up in 2024. But that is a 2024 story. There are no more crypto shows for Bloomberg TV in 2023. We will be back on Tuesday, January 2nd to kick off the new year. Until then, happy holidays. I wish you a healthy new year 2024. We'll see you in January, always 1 p.m. Tuesdays, right here on Bloomberg.